My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in from New Jersey, we've got Joel Kraut, who is a very experienced real estate entrepreneur. He does a lot. He's done a lot in real estate. He helps people get started with real estate. He's been very involved in rent-to-own deals. Most recently, he's gotten into helping out other investors with loans for their deals. So Joel, welcome to the show. Great to have you.
Dave, thanks for having us on. Pleasure to be here.
Yeah. So I gave a kind of a brief overview, but maybe give us a little bit more in-depth view of what real estate looks like in 2026 for you and your company.
For us, we've definitely seen the big pivot the last 12, 18 months. The Midwest is on fire. Obviously a significant change where Texas, California, and Florida were all the rage from, let's say, 20 to 22 and into part of 23. Now, unsexy places like Ohio, West Virginia, Missouri, Chicagoland, Michigan, God forbid, are now all the rage, right? You have
what? For commercial, for single family home, for everything? What are you seeing there?
We're really seeing that for single family investment properties up to small, mid-sized multifamily.
Got it.
Maybe up to about 20 doors in one building type of thing. A lot of the Midwest has those widow and orphan buildings, we like to call them, 5, 6, 7 units, kind of like ugly for a commercial bank, but fit great for a regular investor guy like me. I love it. There's a little less competition because everyone's out there searching for the holy grail of the 120 unit building.
Mm-hmm.
I can own 6, 8 unit buildings and be a really happy guy and run radar. So
what does your personal portfolio consist of these days? What do you focus on?
So I own some single families. I know boring, but everyone still goes to sleep dreaming of living in one, so I like them. And we have a couple of 2s, 4s, 8s, a 19-unit building we just acquired. So that's our biggest new acquisition in a little while. We're doing a lot of 4 to 8 type stuff. It's a little easier to find, a little less competitive, but look, every place you go is still competitive around the country right now.
Yeah, most definitely. But it sounds like they're kind of spread out, kind of far between. How do you do property management and tenant management from a distance?
So one of the interesting parts about being at Burr for us is we communicate with so many investors around the country. And I might say to Dave, we love doing business with you. You're really sharp. You really got it going on. How come you only do 2 deals a year? Well, I'm most comfortable at that level. I never get overextended financially that way. Well, Dave, if you didn't have to bring any of the money to the deal, could you find deals and would you be able to manage them in the manner that we're accustomed of you handling them now? And some people will say yes. Some people say, I'm just not comfortable. But for the people who say yes, we become teammates, right? We
do a joint venture of sorts.
Right. So now I have boots on the ground. I have local management. Somebody knows the 2 best realtors. Somebody knows the 2 best contractors. They're already working for them.
And you're not getting any of those 2 a.m. phone calls from tenants. They're taking care of all.
Yes, I lost my inheritance already, as you can see. I just can't do it again. So, at the height when we had insanity going on in 06, 7, 8, we managed all of our own properties. And I got to tell you, that was ulcers or us. So
yeah,
we try to avoid that this time around.
Very cool. All right. Well, that makes a ton of sense there, Joel. So that's your personal portfolio side of things. Now, you've also gotten into private lending, I believe.
Yeah.
So tell me a little bit about that business, if you would.
So we've been a lender since I learned about it. I did my first true commercial loan in 2001, but around 07, I was building a project at Hunter Mountain, New York, and our bank, like the whole industry, went kaflooey and couldn't keep funding the construction reserve. So you can imagine we have this project, 65% done, 4 or 5 units literally in motion with deposits on them. So we're going to get sued, right? Because, they don't want to hear about the television. They just want their money back. And I've already got it stuck in a building. And one of our friends knew this guy who was a private lender. Now, I really didn't know much about that at the time, honestly. And we became friendly, he really bailed us out. He lent us either 600 or 660,000 at the time, enabling us to finish off either 4 or 5 units. And we got those sold through at a loss.
Mm.
But even with the loss, it enabled us to pay him back. And I saw we had to pay him. And, the light bulb starts to go off thinking, this isn't so bad, right? If I can stomach the risk, this could make sense. So I stayed friendly with him. We built a lot of relationship capital and trust over time, and he started to let me lend his money. And then we found ways to raise capital ourselves, put a few dollars of our own money into a deal, use other people as partners on the deal that wanted to earn returns. And before we knew it, we could start making loans. Then the market started to get institutionalized, as you guys are all aware, and things changed dramatically from, let's say, 2012 to 2014, where a lot of institutional money started to come into the business. And again, everything went crazy, but this time crazy in a good way, because all of a sudden the market had unlimited capital to lend. I mean, the Wall Street conduits just have so much money and can raise it so fast. They need to move the needle, and to move the needle takes gigantic sums of money. So, that's changed dramatically for us. I mean, our little office did $300 million in loans last year.
Wow.
So, it's a business. It's one, you're grinding away all the time in these loans, but it's amazing. You meet incredible people, you build relationships, and we've had some people who are fortunate enough literally have closed over 30 times with us. So, it's been quite a...
So who's your typical borrower? Who are you lending to primarily these days?
We lend to a lot of self-employed people. We're not asking for tax returns and no personal income verification. And that will bog down a lot of people when they go to banks. So for them, we're a nice fit. And what we like to joke with people, but all kidding aside, if you make the payments, we won't put the loan on your personal credit report. And a lot of people like that. So you're not going to affect their debt to income ratios.
Oh, yeah, that's huge.
And, if you're out there going to buy your primary residence, or you want to trade up or buy another one, we're not impacting that. So people like that a lot. So we're making it very user-friendly. You can close quick. You can get certainty of approval very fast. But, it's a very, very interesting world where rates have kind of gone flat, where even in our private world, our rates are equal to the bank's rates. So a lot of high net wealth individuals have now turned over to us as well, and just find it a lot easier to operate with us. So that's proven out to be really good for us all.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Interesting. So do you find that most of your borrowers, are they flippers? Are they buy and hold folks doing the BRRRR strategies, like kind of the name of your company there? Are they small developers? Are they, you mentioned people buying their next residence. So what's the bulk of your clientele made up of?
So about 65, 70% of our business are long-term loans, those the debt service coverage ratio loans that people often hear about nowadays, the DSCR loan.
Yeah.
A lot of fix and flip, a lot of new construction. New construction, I'd say the last 24 months has really, really grown in our business. Just this afternoon, I was working on a $3.5 million one in Delray Beach, Florida.
Mm-hmm.
That's still popular. New Jersey, New York, Pennsylvania, the Carolinas, the Tennessees, the Floridas, the Texas, still a lot of construction going on in the Southeast. Lennar Homes, DR Horton, and tract home builders, but also a lot of people building 1, maybe 4 houses. They're customers for us. Those are easy deals, single families all over. So that's been a great business for us.
That's good. And it sounds like you're not focused on just one particular market. You have borrowers all over the country, or do you focus on specific states?
So we've closed in 34 states. We can close in about 45, 46.
That's most of them.
Yeah. Yeah. I'd say out of the 34, about 18 are the most consistent type of thing.
Yeah.
If you looked, 80% of our business is out of those 18 states, and the rest account for a small amount. But for us, being Mississippi River East is easy, as that's where we're most familiar. And up and down the East Coast, obviously, is very good. We went from Maine to Florida and back again, both privately and institutionally privately. So that's worked, and we're comfortable there. We have relationships up and down the coast. If something were to go sideways, we can go get some access help pretty quickly. So that's been good.
So Joel, it sounds like it's a relationship business. I know there's, these days, or at least that seems like I've interviewed quite a few folks that are kind of in the private lending business. What do you guys do, or what do you find that kind of sets you apart? Or is it really all about the relationship as to why people work with you and they come back time after time?
Well, for myself personally and one other gentleman in the office, we have a lot of real estate experience.
Yeah.
I've personally built 185 McMansions, single family homes and 60 townhomes. So if a job goes sideways, I could actually go finish it. I don't want to, that's for sure, but I could. Yeah. And being able to speak to other people who are on the other side and builder developers and sort of having that experience just changes the relationship instantly.
Yeah, you're not just a bean counter to them.
Yeah, look, I respect everyone out there doing their job.
Yeah.
Especially the people who take real pride in it. But having done it and still doing it helps people. It builds confidence in your ability to help them, your knowledge, your experience, maybe resources that you might have available that they can go tap into. That helps both. And a friend of mine in this business, his big thing is relationship capital. And truthfully, I really believe he's really spot on. I spend as much time on the jockey, the people doing the jobs, as the physical real estate itself, and probably more on the people. I'm more interested in that part because at the end, I know it's real estate, but I'm lending to you, Dave. And I need to know about Dave and what's going to happen when everything goes sideways. Can I communicate with Dave? Will we be able to work together? Or is he just going to go totally dark on me and I have no chance?
Yeah.
We have to go get legal, which truthfully, no one just gets expensive for everybody. So that's not what we want to do.
Yeah. No, that makes a ton of sense, Joel. So when it comes to your lending business, where do you see things going over the next year and a half, 2 years? Where do you see you taking things?
I think it's a really exciting time. I think our industry will actually double in size in the next 3 years. Wow. We keep picking off slowly the easiest, most user-friendly products from banks that are real estate backed and implementing them into our businesses. So I feel like a lot of medium-sized to small-sized investors are exhausted from the banking world.
Yeah.
It takes a long time. A lot of people have to be involved in that decision-making.
A lot of hoops have to be jumped through.
It's exhausting. So you might be surprised, you might not. We have people with 815 credit scores. They own 4 or 5 properties. They just want to refi one. They're not interested in answering questions about the other 4. Mm-hmm. And they only want a low loan to value ratio. Those types of people are not usually trying to max it out. So they're looking for simplicity at good competitive rates. And we can do that. We've closed a couple of loans recently in the high fives. I don't want to mislead anybody. 5 3/4, 5 7/8, high net wealth people, great credit. And they're just talking about the one asset. We're not getting involved in the other 22 properties they own. Hopefully over time we will, but not today. So that's a good situation for us and people like us in the industry.
So you don't think the banks are going to smarten up and make things easier for the clients, huh?
No, definitely not. Definitely not. It's just not in their house. That's just not.
I don't think they will anything wrong.
Actually.
So for the capital that you loan out, is that self-financed? Are you tapped into some deep pocket folks on Wall Street? Where does the money come from for your loans typically?
So we are definitely tapped into deep pocket people on Wall Street.
Yeah,
absolutely. That's the truth. That's where the money really comes from. Mm-hmm. So we aggregate the loans and then sell as a package to them. Mm-hmm. And they basically essentially replenish the warehouse line that way. So we're doing, let's say, $5 to $10 million in loans, selling them off. our line's clear. We're ready to roll again for the next week type of thing.
Interesting. Yeah, who'd have thunk back in 07, 08 or whatever it was that you're going through that you'd end up getting into this kind of full-time eventually, huh?
You know, when I first started out, I actually worked on Wall Street as a trader. I was a proprietary trader for options and stocks and futures. And so I understood what the derivative products were that were being used and how the money moved. And never once did it ever dawn on me that I might end up on the other side of that and actually be people delivering and using those instruments instead of just trading them. So it's definitely been an interesting ride and understanding more behind the scenes now than I absolutely used to. That's for sure. It's a huge business. It's a thumbnail compared to the pure residential market. That's true. But the thumbnail keeps growing, and, you know, it's probably $20+ billion a year now and growing.
Yeah.
Starting to matter.
Yeah, most definitely. Well, that's exciting stuff, Joel. Well, I'm sure there's going to be some folks tuning into this interested in finding out more about you, about your loan opportunities there. Where's the best place for them to go and find out more information?
The easiest place to find us is right at our website. And if people want, they can just go to BRRRR. So B with 4 R's.com. And we promise to actually have humans respond to you, not AI agents. I can't promise you that in 5 years, but today you still get people. And we love that. You know, just touching people and working with them.
Dumb question. What does the B followed by 4 R's stand for?
So years ago on the Bigger Pockets real estate platform, they started this acronym because there's an acronym for everything. And buy, renovate, rent, refinance, and repeat.
Yeah.
And one thing Bigger Pockets forgot to do when they were creating and promoting this acronym was they forgot to buy the .com. But we did. And it was sort of ironic. We were at Bigger Pockets' first convention of mass size in 2021 in New Orleans, just coming out of COVID. About 950 people, 1,000 people there. And somehow we ended up there as one of the 4 lenders. I'm sure they mistakenly thought we were part of their company because the person who gave the keynote speech, Brandon Turner, the guy with the scraggly beard that's pretty well, came over to say hi to us and just welcome to the team. Good to have you. And we explained the situation. He was blown away. And now still to this day, as we travel around and see him at events, it's still like the running joke between us. We'll take pictures like, dude, I can't believe it, you know, type of thing. So it's really worked out well.
That explains it.
Yeah, it really worked out well. It was a miracle and long shot, but it all came together. So it was great.
No, awesome, Joel. Well, hey, thanks very much for being on the show. It's been a pleasure.
Thank you very much. Have a great day.
All right, everybody. Tune into the next one. Take care. Bye-bye. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.